Jeff Christian joins me now of CPM Group. He's a keynote speaker here at the Metals and Minerals Conference in New York. Jeff, good to be back with you.
It's good to be here.
So Jeff, last time we spoke, seems like yesterday, but it was actually during the PDAC in Toronto, and we had an interesting conversation about the London gold fix and its credibility. And recently, or last week, I had John Hathaway on, who said that the fix is archaic and should even maybe be overhauled. I was wondering what your sentiment was in regards to this.
Well, I think that the fix could be overhauled. I think it could be modernized. It could maybe even be computerized. I'm not sure about the computerization thing. I think that you need a price that can be used in settling contracts, and the fix has done that for 100 years. And I worry about a rash move to something else that could be even more opaque and even more open to influences by one or two large participants. I think a lot of the people who are criticizing the fixes don't really understand how they are. And if you listen to some of the criticisms, they're very ill placed.
All right, let's talk metal forecast now, Jeff. I know that you're liking the PGMs and you think that there could be a good growth story here for platinum.
Well, yes and no. I mean, what we're saying right now is that we think that platinum and palladium prices will rise in the longer run, but they're vulnerable to a spike down when the South African strike settles. I mean, the fact that the prices have not risen sharply during the strike is extremely worrisome to a lot of people in the PGM markets. So you've seen people sell the metal with the expectation that once the strike is settled, there'll be a spike down, and then they'll reposition at a lower price.
And Jeff, let's look at the gold front now. I just came off your presentation, and you were saying, look, the likelihood of a recession in the U.S. is 100% that it will happen. Would this ultimately be a bullish factor for the metals, especially gold?
Well, to clarify, I said, look, the probability of a future recession is 100%. The question is when. And recessions and gold prices don't necessarily mix. Sometimes you'll see a recession drive the gold price higher, and sometimes you'll see the gold price rise higher in advance of the recession as people get worried about what's going to be happening in the economy. But then other times you'll see the gold price fall. I mean, if you look at the big recessions that we've had, the big recession in 1980, gold prices rose up to the start of the recession, and then they fell sharply. They gave up 65% of their value during the recession, only to rise later at the end of the recession. If you look at the 2007, 8, 9 recession, gold prices rose strongly, but they gave up half their value, and then they took it back and moved to new highs, all during, mostly after the recession with the financial crisis going on. So there's nothing that you can say with certainty that a recession will cause gold prices to rise or fall.
But let's look at gold right now in this moment where a lot of people are trying to apply reason or figure out what's happening. Why isn't it moving? Or we're kind of stuck in this range. What do you think would be needed to get excitement back into the gold market, Jeff?
Well, I think one of the things you're seeing right now is a lot of investors are distracted by the equity market. And the equity markets are moving strength to strength. So one of the things that we're looking for, we think gold prices could rise September, October, November. And one of the reasons why we think that is because we think that the stock market will be strong until September, October, and you'll be that much higher. I wouldn't be surprised to see the S&P at 2,000 by September, October. I wouldn't be surprised to see it at 1,650. By October, November. So, the idea of the stock market continuing to distract investors away from gold for now, and then when the stock market does come off, could give up 15 or 20%, and that could be the stimulus for a lot of investors to cycle back into gold.
Jeff, on that note, I know we covered a wide range of topics here. Thanks so much.
Always a pleasure.
And thanks for watching this edition of Commodities Confidential on the road here with Jeff Christian in New York. You can email us any comments or questions at newsfeedback@kitco.com. Thanks for watching.